All right, we are live. Hi. Let's say good day, good morning, good afternoon. Just depends on where you are in the world and when you're tuning into this broadcast. My name is Clara Lyons-DeVaughn, and I am the broker owner of Lyonsview Realty. We provide real estate for residential, commercial for small businesses and nonprofits, and property management services. And I'm very, very excited to announce Lyonsview Academy, which is coming soon. That's our education arm. And I want to welcome you today to Lyonsview Realty Financial Fridays. We are committed to ensuring that you have resources, information, and tips that ensure you're making the best financial decisions. Our commitment is really to maximize your wealth building power now and in the future. And we're here to help you stay current on those trends that are impacting your bottom line. So glad you tuned in today. Welcome, welcome, welcome. Feel free to like and share this video. And if you have any questions, type them in the comment section and we'll be sure to get back to you. So our guests are here as a resource to you. So please, please, please ask questions if you have them. And today we have a very, very special guest, Miss Vonetta Hawkins from Wells Fargo. Hi, Vonetta.
Hello, Miss Clara. Thank you for inviting me to this Financial Fridays. Really looking forward to providing some valuable information for the viewers.
Awesome, awesome. Tell our viewers a little bit about yourself.
So I'm with Wells Fargo, and that's the company that I work for. I've been in the industry, the banking industry, for actually to be 29 years in June. Maybe I should have like a party or something. 29 years in June. This is just really what I do. I manage, from a career perspective, I manage Wells Fargo's homeownership strategy in the Northeast. So my role is just really making sure that we are doing our best and creating homeownership opportunities for our diverse buyers throughout the country. So love what I do. I'm a wealth of information as it relates to mortgage and real estate and this industry. So Ms. Clara is somebody I respect and admire. So I appreciate being on this call with her for Financial Friday. So hello.
Thank you. Thank you. And I met Miss Vonetta through the National Association of Real Estate Brokers. Wells Fargo is actually one of our national partners, and she has just been a phenomenal resource, not only to us at the national level, but also at the local level. And I just love her. Yeah. She's a wonderful, not only a wonderful person in business, just a wonderful person in life. So that's
Ditto.
Thank you. So today we are going to talk about the Coronavirus Aid Relief Economic Security Act, kind of known as the CARES Act. And as you know, Congress put about $2 trillion in, I guess they passed it in March of this year. And that money went for families. They got stimulus. People are receiving their stimulus checks now for $1,200 for adults, $500 for children under 17. So some people have gotten those checks already. For businesses, they provided tax credits, payroll tax deferment, payroll support incentives for businesses so that they can keep their employees working. They did $150 million in coronavirus relief fund to states and local governments for the healthcare, providers and healthcare systems, things that they hadn't anticipated in their original budgets, and $349 billion to small businesses. And that money, I'm told, is gone, but Paycheck Protection and EIDL, which is the Economic Injury Disaster Loan. So they're hoping to refund that money. But also as part of the CARES Act was mortgage forbearance. And there's unemployment, all of those things, but mortgage forbearance. And that's what we're going to be talking about today. So as you know, modifications are not new, right? Can you talk a little bit about, kind of the difference between a modification in our before and what we're experiencing now with loan forbearance now?
So, and I'll just maybe take us on a little little history lesson before I jump into the answer.
Yeah.
So back in when we had the housing crisis back in 2008, we as a country was able to learn a lot from our mistakes, how we can do things better, whether it's from a lending perspective, it's from an industry perspective, it's from a consumer perspective.
Mm-hmm.
So there was a lot of learning based off of that crisis. And you always hope to, when you're going through something, you always hope to come out and learn something from it. Yeah. So what I will say is that as an industry and from a consumer perspective, we all learned a lot. And some of our learnings are coming into how we react to this housing crisis today. So from a lending perspective, we're able, lenders, and I speak broadly when I'm speaking right here. I'm not speaking necessarily with my Wells Fargo hat. I'm speaking just from an industry perspective. Mm-hmm. So we as lenders have learned on maybe we need to communicate a little differently. When it comes to having those conversations with those borrowers that may be impacted. Maybe we need to offer some different avenues in which people can make their repayments and things as such. And from a consumer perspective, consumers are more open to making sure that they're going to the right resources to be able to get answers. Which was a big part of our challenges in the past. So from a lending perspective, we're able to better offer programs and services for our consumers. And from a consumer perspective, they have more avenues in which to get assistance and to get resources. I mean, look at this. Ms. Clara is on this call providing resources and information. Technology is playing a huge part in what's happening. And that information and communication piece. So I will say that I thank the housing crisis for 2008 because it has definitely put all of us in a better position today. Mm-hmm. Now, as it relates to forbearance, modifications, suspensions, all these things have been here since forever and forever and ever. However, we are looking at how do we put them into action today so that they're impactful and yielding positive results for our impacted buyers. So a modification is when you let's say you have a 30-year mortgage and you have 20, let me use round numbers. So 25 years left on that mortgage. Financially, something happened. You have two income households. One person loses their income, and now you can't necessarily afford to make your mortgage payments. You reach out to your lender. You explain the situation. They run some numbers and see if you qualify for what is called the modification. And what that will do is, let's say your mortgage payment was $1,000, and that's what it was for that 30-year period. And you had 25 years left to go. So they might do a modification for you. They might extend your mortgage back out to 30 years and maybe drop your payment to $800. So now your loan has been modified in some way, shape, or form. Your loan numbers all stay the same. None of that changes. Whoever was on the loan, all that information might stay the same. But your loan might get extended for a longer term, and you might walk away with a lesser payment. So that's typically the modification process. The modification is really on how can the lender help you continue with your mortgage, but at a lower payment than where you were currently at, because financially you're unable to afford that particular payment. So that's a modification. A forbearance, on the other hand, is a little bit different. A forbearance says, Houston, we have a problem. The forbearance is when there is maybe a complete income loss from a situation. So the bank at that time, the lender at that time can say, okay, well, let's say your financial situation may take 3 months to get back on track. You just lost your job today. you have no more income to be able to make your mortgage payment, May 1st. So you have a conversation with your bank and they might say, okay, no worries. What we can do is we can extend or remove your payment for a 3, 6, whatever term, 9, 12, whatever month term that they choose or that you guys come to an agreement with. They can stop that payment. And then what they will do, and this is where you're going to have continued conversations, is those payments don't go away. They don't just disappear off the face of the earth. They are still here. And they might be due at the end of that 3, 6, 9, 12 months. But then there's also other options. And, you have to really have a conversation with your lender. Some lenders can put them at the back of the mortgage. So if you have 25 years left, they can just put those 3 missed payments at the back of that 25 year. So it just all depends on your servicer. So that's the person, whoever you're making that mortgage payment to. It just really all depends on them and, what they may offer. But the forbearance stops all foreclosure actions. There's no impact to your credit from a missed payment perspective, and typically there's no fees involved for late fees and things as such. So that's kind of the biggest difference where when it comes to the forbearance as opposed to the modification.
Gotcha. So the forbearance is really for this season. It's for a limited season.
Right.
And
right.
The key thing is that people need to talk to their particular lender and ask those questions. What can they do? How can they do it? Like the lump sum is one after the period, putting it on the back end of the loan at the end of the loan period, or, making the payments, some sort of different payment arrangement for those funds that were missed.
Exactly. And I didn't really touch on that last piece. So, and thank you for that, for that, Clara. So if, let's say after those 3 months, then it's like, okay, well, now you owe the back 3 months of payment. Maybe what they can do, rather than asking for a lump sum, and say, okay, well, let's spread this out over the course of, a year, or whatever the case may be, so that you don't have to come up with this huge lump sum after those 3 months just because you got a job again. So there are options to be able to take that lump sum amount and spread that across your payment, the rest, some additional term, a month or several months or a year, whatever the case may be. So they can spread that lump sum so it's not so impactful. But at that time, that's when you all get to come back to the table again and revisit the situation. What is your income? Do you need, maybe you can get a modification at that time. It just all depends. But make sure, I would say, make sure whatever you do, you can do it. Whatever you agree to is something you can do. Yeah. So don't just agree to something just because maybe it sounds good over the phone. Get everything in writing.
Yes.
Sometimes we don't like to go through the fine print, but I want you to pull out your magnifying glass and be like, what?
Right. And if it's not right, don't sign it. Send it back.
Don't sign it. Exactly.
Yes. So with the modification is typically for the life of the loan, or is it? And its forbearance is just for a shorter period of time.
Exactly. And even you always can. If you go into a modification or you go into a forbearance, you can still potentially refinance in the future. It just really all depends on what is happening right now with your current picture. But yes, the modification is your whole picture just done changed, and it's a long-term situation. And the forbearances, we have a situation right here, right now, we fix, and it's a temporary fix to hopefully a temporary problem.
Gotcha. Now, the CARES Act really only covers government-backed loans, and a lot of people don't know which ones are the government-backed loans.
Right.
So can you share that with our
right. Today? So right. So our HUD. So typically, if you have an FHA, a VA, a USDA, those are all government-backed loans. So if that's what you have, then rest assured you're government. Also, there are the Fannie Mae and the Freddie Macs of the world. Those are some what we call GSEs. Those are also government-backed of loans. However, there are loans that might not be government-backed, and you wonder, okay, who know? First of all, when you got your mortgage, nobody was like, okay, sign this government-backed loan dotted line. No one said that to you. So you have no clue if your loan is government-backed, not government-backed. This terminology is complete, like another language from the perspective. Okay, and trust me, no one said this to you when you got that loan. But with that being said, all loans have some type of backing. We just don't know who's backing the loan. Typically, and so to kind of maybe help put it in perspective, sometimes if you go to maybe a smaller credit union and you get a conventional loan, they might not be government backed. They might just be directly with that credit union. Some big banks, they hold some of their own portfolio. That might not be government backed. So you can be with a big bank, you can be with the teeny tiny one, or you could have went with your broker that your friend recommended down the street. Who knows if that loan ultimately is government backed? Unless it's FHA, VA, USDA, those are 100% government backed. So if you got one of those, you kind of know you got one of those. But if it was with Fannie or Freddie or just with your particular lender, you won't know. The only way for you to find out is to pull out your mortgage statement. Hello. Am I going to cares or not? So you can call your mortgage servicer. So your mortgage servicer is the person that you make your payment to. Okay. So when you pull out your mortgage statement, you call the bank or whoever's on your mortgage, whatever lender is on your mortgage statement, and the person that you might be calling that's on your statement might not actually be the servicer from when you originally got the loan. Okay. However, they are the ones that will tell you who your servicer is. Okay. So you may call your broker, you may call your bank, you may call whoever's on that mortgage statement. But please know that mortgage statement person might not be the original servicer from when you originally got that loan. But they are the person that can tell you who services your loan and what benefits do you receive from that servicer. Okay. So they'll handle the entire process for you, the person who's on your statement. Yeah, okay. Exactly. So that's it. Right. End result. Pull out your mortgage statement, call the person on your mortgage statement, and they will walk you through everything. You don't have to call them and they're going to transfer you to somebody else. No, they are the people. Okay. And then what paperwork do people need to do to apply for forbearance? Do they need to do anything different, or? It's just, it just all depends. Some institutions are just saying, look, you lost your job. Okay, look, we get it. And the process could be super easy. Could be a super easy process. Maybe they don't need much documentation. But some lenders might require, some extra stuff. Whatever they need, give it to them. At the end of the day, they're trying to help you in your situation. So if you have to, figure out a way to get your stuff online or whatever the case may be, to be able to tell your story, just give them whatever they need, because at the end of the day, they're going to be able to help you in your situation. So call your lender who's on your mortgage statement, walk through the process. A lot of people are doing things online, so you can even go online rather than calling, because think of a lot of Americans right now are working from home. So when you're calling different companies or organizations or what have you, the phone lines are extremely busy. There's long waits. So you may be able to even go to the website of your bank, of your lender, and apply for the forbearance or modification or anything right there on the website. Mm-hmm. That's really good, because a lot of people are taken aback. Some people are very proactive and they jump in and they reach out, and other people shrink back and say, oh, I heard I don't have to pay my mortgage, so I'm not going to pay my mortgage and all of that. Go ahead. Go ahead. Which gets me to my next question. So this, there was
information about there being a 60-day suspension on foreclosures and eviction of borrowers. And I think people are a little bit confused about if, who that really applies to.
Right, right. Thank you. That is an excellent question. So yes, Governor Murphy and Governor Cuomo are doing a fabulous job in suspending mortgage payments. It's what they're saying. Stop the presses, people. Listen to me. Listen to me. If you have not been impacted financially and you have not gone, then make your payments. Hello, make your payment. As you're paying everything else, make your mortgage payment. Your institution or your lender might not fall under those guidelines that the governors have put out there on mortgage suspensions. It doesn't apply to every single mortgage. It doesn't apply to, it's not a blanket mortgage suspension for anybody with a mortgage in New Jersey or New York or wherever you're at. It's not a blanket suspension. It doesn't even, in several cases, it doesn't even apply to the major banks, to the GSEs and the government-backed loans. It might apply to the little tiny ones that don't get the CARES Act. So listen to me. I appreciate what the governors have done, and I think it is commendable and it is awesome that they put the moratorium around suspensions. But you will definitely need to call your lender and find out, number one, if you lost your income and can't make your mortgage payments, is where you need to call your lender, where you might qualify for some type of suspension as the governors have instituted. If you have not lost your income and things are still moving like they were before, then you got to make your payment, because there's no moratorium when you're not making your payment. So don't assume that it was a blanket suspension, because it was not. Everyone needs to continue to make their mortgage payments as they were. But if they're experiencing financial difficulties, don't go in that shell. Reach out to your lender. That is the best thing you can do. The earlier, the better. Don't wait. May 1st is coming. If you missed April, it's not the end of the month yet. So don't officially count until you 30 days late. So you have, till the 30th to make sure you call your lender and have this conversation, so that nothing is impacting your credit and you're having 7-year life changes to your credit profile because you didn't make a phone call. So if you are having challenges, the moratorium may benefit you and it may not benefit you. But at the end of the day, it is not a blanket suspension. You need to call your servicer and have a conversation.
Yeah. And there are people who are in a different category. So there were people before all of this started, they were in trouble.
Right.
They were in the process of going through the foreclosure process. Some of them were in the process of being evicted because of the foreclosure process. So what about that group of people?
So those are the ones where it's been halted. So nobody can take anybody to court now to foreclose on their house, or to evict them from their property. So those are the ones where if you were already in the foreclosure process and about to be foreclosed on, those have been suspended by the governors. So I would still recommend still call your bank as well and have that conversation with your lender. I heard the moratorium is here. I know I've been going through the foreclosure process and I was supposed to be foreclosed next month. Where do we stand right now? What is my options right now? So if you were going through that motions as we speak before prior to the governors putting the moratorium, then definitely reach out to your lender to kind of understand, how did the governor's moratorium impact you and your situation? And what does your situation look like today?
Yeah. About how many people, that's all really, really great advice. Because at the end of the day, you need to communicate.
Yes.
Whether it be in writing, over the phone, you need to communicate with your service provider. So what would you say is the percentage of people who have actually, come forward to request these services, for the forbearance services?
So I don't necessarily know from a national perspective, but that's a great question, and I'm definitely going to do some research. I would really love to see. I'm quite sure Fannie and Freddie are putting some data out there, and also maybe HUD. I can say from Wells Fargo, there was data that was published, and they had done 1.3 million consumers.
Wow.
Right. 1.3 million consumers had applied for assistance.
Wow.
So, that's great. That means that's 1.3 million people that made a phone call. So,
Right.
yay to them.
Right.
Yay to them. So, if that's where your situation is at, and this is just one company. So,
Yeah.
there, 10 million people applied for unemployment in 2 weeks. I'm quite sure a good portion of them had more.
Yeah.
So,
Yeah.
so huge numbers. I would definitely say it is.
Awesome. So the other thing the question that came up was about investors who are holding property.
Mm-hmm.
Say they have a portfolio of investment properties. What would you say to those people who,
I would say the same thing that I'm telling the people that are owner occupied.
yeah.
Call your mortgage servicer, because these benefits also apply for investors, non-owner occupied properties, commercial properties. There are benefits out there for a little bit of everybody. And if you're an investor and you own multiple properties, you might have different loans against all those properties. So don't just call one company and thinking that's the end all, the do all for all your other mortgages that you have out there. Even if you have, let's say you own 5 properties and 3 of those properties are with one lender.
Mm-hmm.
And you call the one lender on one of the properties and they give you your answer. Maybe you can't you can't get any assistance. Mm-hmm. Don't think that applies to your other 2 loans with that lender, because maybe it doesn't. Maybe the other 2 loans aren't the same servicer. Maybe you got them from different locations. So don't assume anything, because we all know what happens when we do that. Don't assume anything. Call your lender call your lender for any investment property that you own, and find out what are your options from a non-owner occupied perspective. But please understand that there are options also for non-owner occupied properties.
Gotcha.
And I would do a side plug. Section 8 still making their payments. So I'm Section 8 tenant. Yes, I got my check.
Yes, they are. Yes, they are.
So, you definitely might want to consider Section 8 tenants, because that check did not stop.
The government is still moving on in that direction.
It's moving.
So if I have 2 properties and they're both ABC Bank, what you're saying is call ABC Bank for each individual property, because it's different.
Exactly. Yeah. Exactly. Because you never know. You never know.
Yeah. Got it. The last question is around scams. So, there have been some things out there. How would you warn people about some things that are out there? You were telling me a story before we went on air. You want to share that?
Yeah. So when I kicked off the call, I talked about, how do we learn from 2008, the housing crisis, to where we are today. What we learned from 2008 was that scams are real. There were so many companies that just created themselves and really were very detrimental to the industry, to the consumers of the industry, where people, you would call these scammers and they would charge you thousands of dollars to literally do exactly what you could have done if you would have just called your bank or your lender, whomever it is. Yeah. But they charge you thousands of dollars over periods of time, and at the end of the day, a lot of times they didn't even help you. Yeah. So they, let's just say, what we have learned is that scamming is real, and please know from a consumer perspective that you have options, you have rights, and there are people out there that are legitimately offering free help,
Free.
And are not willing to do wrong by you. So where's this free help, right? How do you avoid scams? You avoid scams by going with reputable institutions and or companies. So let me give you a couple of them. Number one, your bank or your lender, wherever they are. That is the first phone call that I need for everyone if you're having financial difficulties, is to make. Pull out your mortgage statement and call that number. Number two, there are housing counselors.
Yeah.
So you go to HUD.gov, and I'll throw a shameless plug to NAREB. NAREB has housing counselors. A lot of the NAREB realtors are housing counselors.
Yeah.
So, so that's HUD.gov.
Yeah.
You go to HUD.gov, you can search any city, county in this country, and you can get a list of approved, certified housing counselors. You call them up. They will even call your bank with you to help guide you through the motions. Yeah. The state of New Jersey, you can call, you go to NewJerseyHousing.gov. The state of New Jersey has counselors and processes in which you can get free help, legitimate free help. Do not pay anybody to do a modification for you, to do a forbearance for you. Do not pay anybody anything to do anything for you when the government has free help. Your lender is there with literally free help to help you. So call your lenders, my most important thing. Go to HUD.gov if you want to have backup, and they will join the call with you. They will help you understand the right questions to ask, because sometimes we just don't know what to ask. We're in a situation, it's a scary situation, and we don't know what to say. We don't know how to ask for help. And it's okay. But please know that there are people out there, legitimate people that are helping people for free. If somebody comes to you and say, I can help you modify your loan, I want you to run the other way, number one. Number two, if they say, just pay me a couple dollars and I help you get on track, I want you to run the other way, because if you're
yeah, free.
I just want you to know that there's free help. Google housing counselor in your town, your city, your county, and some will come up, and that's who you can walk in their door, or virtually, because anybody walking nowhere. You virtually call them up and they'll be able to assist you. The reason why I would encourage you to go to the HUD.gov, because those are the certified housing counseling agencies, okay, which is very important. The difference between certifications and non-certifications, right? You go to the doctor's office, you want to see that sign that says I've graduated Harvard Medical School, whatever it is. Right. You want to see the papers.
Right. And the most updated information, because the information is changing daily. Exactly. So those are people who, said, I'm going to keep up with the information so that we give you the best information. Yeah. Exactly. Anything else that you want to share, either about the forbearance process or about some things that you've got going on?
The one thing I will say is the homeownership rate for African Americans is 42%. Yeah. The full homeownership rate for Hispanics is 47%. For Asians, it's 58%. For whites, 74%. Yeah. And for all Americans, is 64%. What I would hate to happen is that this housing crisis impacts the homeownership rate for minorities. For only 4 out of 10 Blacks and Hispanics to own a house is a challenging yet opportunist, a great opportunity for us to increase it. So if you are experiencing something, don't lose the largest asset you own. Wealth in the minority communities has room to grow. I'll say that. I think Bloomberg did a study and said that in, I don't know how many years, but it wasn't a long period of time, that the Black wealth will be in the negative.
Wow.
In a negative. So homeownership builds wealth, creates wealth, and creates opportunity.
Yes, it does.
Do not allow your opportunity and your wealth to be taken from you
Yeah.
because you didn't make a phone call, or because you called the wrong person, or because you were too afraid to ask for help. Ask for help, maintain your wealth, and don't lose it. And then from a purchase perspective, if you were on the road to homeownership, yay! Oh, we were using Clara. If you were on the road to homeownership, stay on the road. Again, the homeownership rate is extremely low, and we don't want this housing crisis to, make it drop even further. So stay on the road to homeownership. It might be a bumpy road, but what roads are really straight? Seriously. So it might be a bumpy uphill road, but stay on that journey. Work with your professionals, but don't lose sight of the goal. Don't lose sight of that American dream. You can achieve it. When you started on that journey, excitement built up inside of you that one day you were going to get that key. Hold on to that excitement. Hold on to that excitement, because that excitement will keep you moving forward to achieve that dream.
Indeed. And there's one thing I forgot about, which is taxes.
Okay.
So when you're going through this process, is the borrower still responsible for paying their taxes and insurance on the property, or is that rolled into the note?
So I guess it just all depends. So if your mortgage included your taxes and insurance, your taxes and insurance are going to keep sending the bill to the mortgage company, and the mortgage company is just going to let's just say nothing's going to separate. Nobody's going to the taxes and the insurance company will continue to send your bill to your mortgage company. If they're not going to get no money because you're not making no payment. But at the end of the day, the bank will always ensure that these things get taken care of. If the insurance lapse, they give you some. They get some insurance on you. Just tack it on to your bill. So the one thing they're not going to do is allow the tax people to foreclose on your house because of you not being able to make your payments. So if your taxes and your insurance was not included in that mortgage payment, then I'm going to need you to make some phone calls and have a conversation with them because it wasn't included in the mortgage payment. And they're also looking for their money. But I will say, from the housing crisis, I will commend, aside from the lenders, in State Farm, I saw had a commercial around, if you're having challenges, to give us a call. So some people are really stepping up to the plate. Some companies are stepping up to the plate, recognizing that there's situations happening and doing the call to action to help their consumers. So if you were making your own payments on your own, then I would say call over to your insurance carrier and have a conversation, and call over to the tax people and have a conversation.
Wow. Well, thanks, Al. Al chimed in. Thank you, Clara and Vonetta, for sharing such great information for the community. We appreciate everyone who is watching. And Ms. Hawkins, would you provide contact information if people want to reach out to you? How would they get in touch?
So they can definitely reach out to me. My phone number is 908-420-4272. There you go.
Awesome. Well, this has been great information. And if you need a forbearance, you're having financial difficulty resulting from your inability to pay your mortgage, the CARES Act gives you permission to request. They give you the right to request help. So exercise your right and request that help from your service provider. You can't just stop paying your mortgage. You have to reach out, as Ms. Hawkins said, and talk to someone. If you can't get it in writing, there may be some additional paperwork, or there may not, but your interest is going to still accrue over the life of the loan. But that money is not forgiven. You still owe it. It's just making an arrangement of when you would have to pay that money back. So I just want to thank Ms. Hawkins again. Uh-oh, what happened? I lost her. Oh, there she is. I lost her for a minute.
Thank you all. I appreciate you, Ms. Clara, and thanks everyone for watching. Reach out to me if you have any additional questions.
Awesome. So please reach out to Ms. Hawkins, use her as a resource. Thank you for those people who are watching us live, or if you watch the replay. If you found the information helpful, please like and share this information with others. We want to make sure that everyone is informed. And thank you again for tuning into Lyonsview Realty Financial Fridays. If you're looking to sell, buy, rent, or pursue a career in real estate or invest, you can email us. The contact information is below. And just the Lyonsview team is really here to provide you with resources, with tips, with information to help you make the best financial decisions now and in the future. So we want to send love and light to all of our essential workers, our service providers, our firemen, our healthcare professionals, those people who have to go to work to keep things rolling. We just want to make sure we send you love and light. And I am Clara Lyons-DeVaughn. You can join us again live on Fridays at 9:30. Until then, keep living your best life. Thank you.
Live your best life. Love it. Bye, everybody.
Bye-bye.